Cool video today where I'm going to review a study that's all about opening range breakouts and how this could help your trading. We're going to go into trade ideas and I'm going to show you how I built the settings for this exact study into that system. I will share the link for this scanner over on my Substack. So if you go to statsedgetrading.com, you can sign up for the email list there. You can go to my Substack and check that out. Also, while you're there, I have a completely free trading course. If you're new to trading and you want to learn more about it, you can go check that out. If you're a little bit more advanced, but you want help building a trading plan, I have a course that will help you build a trading plan that's based entirely on your goals, your time frame, when you can trade, what you can trade, all of that stuff. You'll build a trading plan. By the end of it, you'll have a PDF that tells you when to enter, when to exit, why, again, that you have built yourself and customized exactly for you. But without further ado, let's get into the study right here. First of all, a shout out to the person who made it. Where was that? I am going to butcher this. Concentrum Research put out this study a long time ago now, February. Well, I guess not that long. And this was sent to me to take a look at. Hey, Mike, what do you think of all this kind of stuff? And this is what we ended up getting right here. We have this chart on the opening range breakout strategy in black, just the base version of it, versus the S&P 500 versus an opening range breakout with relative volume in it. So I pulled some out of the study. I will link the study down below. If you're interested in reading it, it will be linked in my Substack as well. If you want to read the whole thing and get all the exact rules, I'm just condensing this down for time, but I do think it was really good work that they did. What is an opening range breakout? So the idea is that you have the open of a stock, you have the opening range that's put in whatever time frame you pick. They found that 5-minute was the most conducive, and I have a chart for that later, but you just mark the high and then you mark the low. The idea is that you're looking to break higher to buy that opening range, or break lower and you're looking to short that opening range. And then what happens if you do that with some rules attached to it? And this is what the study talks about. Here's just an example. This would be a long setup. You have the first 5 minutes, sets an opening range. On the next candle, it breaks out. And then on the next candle, it breaks lower. It doesn't have to be the next candle. That's just the chart they had for explanation here. Here is an example trade where you have the first 5 minutes. The low is this line, this dotted line right here, and it's the low of this candle that you can see right here, and they short. But you cannot do a trading test like this without a stop loss and a profit target. What they did for a stop loss was 10% of the ATR. So ATR stands for average true range, and all it basically means is how much does a stock normally move in a day? Let's take 10% of that, and that's going to be our stop loss. So what I think is happening here is you're getting this opening move one way or the other. And if the stock is going to break and go cleanly, you're going to get a trend all day. If not, you're going to get stopped out for a small loss. I think the power of this strategy isn't so much in its insane predictive power. It's the fact that you can have these opening range breaks that just tank all day, kind of as you see here. And your stop loss is very, very tight. In this case, the stop loss was this dotted line right here. Just like a lot of strategies out there, a lot of trend following strategies, the power is simply in the fact that when you're wrong small. When you're right, every now and then you're going to have a trade that just blows completely out of the water and makes a whole bunch of money. That's the idea that I'm seeing here. Here are the basic rules that we're going to put into trade ideas. Again, all of these were pulled from the study. Price has to be over $5 a share. The average trading volume has to be over 1 million shares. And that average true range has to be more than 50 cents, meaning the stock has to move in order for it to hit our radar. Because if stock doesn't move, really, what's the point, you know? That first black line that I showed that wasn't very good, that was just taking all of these opening range breaks, and that didn't work very well. So what they did is they went and they looked at relative volume. They said the higher the relative volume, generally speaking, the better. And this is what you want to see in a comparative bar graph like this. This is a robust indicator, which means that the higher you went, generally the better. A little dip right here, but as soon as you got into the really high relative volume range, that ended up being the best to take the trades. And that's what you want to see. This is just the higher the bar chart, the more money on average was made per trade compared to its risk. Nice, push here to the right hand side. Again, this is exactly what you want to see. So meaning adding relative volume counts. Now they added relative volume in a way that just showing, show me the top 20 relative volume names in the day. That's going to be a little bit hard to do real time. That's kind of my only gripe with this individual name, is knowing what those highest relative volume ones were in advance. But what we're going to do in trade ideas is we're going to look at really high relative volume names and go from there. So again, back to this example, you can see that the line that barely does anything, this is without relative volume, and the line up there, that's with relative volume. There's a great takeaway, I think, just in this chart alone, ignoring the opening range breakout side of things, is that if you're going to day trading things with higher relative volume, you're going to get more movement. That movement is going to translate to more profits. One thing that Trade Ideas does very well is we study relative volume to make sure that everything we're trading, everything our AI is looking at, for example, are high relative volume plays, because even if the win rate doesn't end up being the best, the fact that you get these blowout trades every now and then is really what makes up for that graph. So, right here, for example, this could have been a handful of trades that just really went well. And same right here, a handful of trades that really went well. And this is from 2016 until the end of 2023, I believe. Now, this chart here is just looking at the different opening range breaks, right? So the blue is the 5-minute, and then this orange right here is a 15-minute opening range break. And then the line right here is the 30-minute, and then the 60-minute. So it seems like 5 and 15-minute work the best. That makes sense because you get most of the movement in the morning, and then things kind of die down. So a 60-minute opening range break, it makes sense to me. It doesn't perform very well because, again, everything is kind of just, taken out, and there's your action for the day, and now the market's just kind of basing. Again, shout out to these guys, link in the description below. This will all be put in here, but let's pop into trade ideas and let's just grab the scan. I'm just going to go through and show you guys how I set up the scanner. Again, the link will be on the Substack, or you can just hit me up on Twitter or something. I'm sure I can get it to you there. The way to build this in Trade Ideas is really simple. And the beauty of it is we've had this scan forever. This is just a lot of data that backs up the idea. What I do is you go in, you search when you create a new window, and you can just type things. So if I type in opening range, you can see all of the, I have to spell it right. You can see all the different opening ranges that are right here, but we want to focus on the 5-minute because that's what the study showed worked the best. Opening range 5-minute break, you can see happening kind of right in this area. So I'm just clicking these two, opening range breakout and opening range breakdown. Now we go over here, we can see the price, $5 a share, like it said in the study. Average of daily volume, they had 14 days. We'll use 10. It's just going to be a rounding error of 1 million shares. And then average true range is 0.5. Now I put a relative volume of 5. That means 5 times normal volume needs to be occurring at the time of the entry. You can up this if you want less symbols. You can lower it if you want more symbols. This is the place that I would play a little bit depending on what you're seeing. And it creates this on the side. So these are all the symbols that would have come through today. For me, I would kind of stop trading this after, say, the first hour or so of the day. Pretty interesting setup. So here's one that came through today. You can see it right here on the side. And this is DJT. Now what I've done is I've added to this scan what the average true range is, because it's simply 10% of that. So that makes our calculation on how to trade it really simple, because again, I highly believe that the outcome of this strategy is so good because of the low risk reward. So let's just draw in some lines here to show you guys what the trades would have been like. First, we have the low of that candle. So this first candle is that 5-minute opening range. You can see the price that this came out was right here. So it's 57.92, the symbol that gave it to you. So it's right as it breaks this low of the day. Now it comes through and it says $8, that's the ATR. So we want 10% of that. So roughly we want 80 cents. So it's giving to us about $58, give or take. So 58.80 is going to be our stop loss. Let's just say right up in this area right there. Here's your trigger. There's your stop loss. The sell is at the end of the day. And that would happen right here. So 48.50. So you're talking, you made $10 a share, risking $1 a share. That's an amazing trade on this particular name. Again, it's a great, if you took 10 trades today and 9 stopped out and you held this one, That's great. That's exactly what you want to see. How would I kind of tweak this strategy, knowing that paper trading to real life, it's a little bit different, and back testing to real life is a little bit different as well? Well, first of all, me personally, I'd probably crank up the relative volume a little bit higher, depending on what you want to see. But also, I would make sure that you're evaluating the higher time frame chart. This is something that's very hard to quantify, but you can go here to the daily chart. This one, for example, this DJT, it was gapped up huge, and then it was looking like it was closing that gap. Very volatile type name. So it didn't shock me that this one kind of fell apart entirely and pushed to new lows. But if you're having a stock that's really strong and hitting new highs, and then it comes out in the short list, maybe you want to remove that as well. Maybe you want to add filters where you want, the daily chart to be overbought or oversold or something like that. I would tweak this scan, not by tweaking the entry and the stop loss, because I think that's, again, the power of this is looking for that entry and looking for that stop loss. What I would tweak personally is I would tweak the selection of it. So you're not getting 100 symbols a day, you're getting, 4 or 5, and you're adding filters based off what's happening on the daily chart with position and ranges and things like this, just to make sure that you're looking at names that are filtered a little bit, names that you would like. You could also feed this scan your own list. For example, if you wanted to scan the night before and there's a handful of names that you thought would do really, really well, or if you're scanning in the morning and you're seeing a lot of names that you think could move based off news catalysts or something like that, you can put that symbol list into this scan and have it spit those out for you. So it's the longer term time horizon that I would use to help filter this down and hopefully increase results, knowing that you should be doing at least as well as that study showed. That's what I would do. That is what I saw from this study. If you want me to review more studies, whether they're day trading or investing or long-term studies, let me know. I'll take a look at them. If there are things that I can test myself that I feel comfortable doing it, I will go and I will test them myself and bring all of that information to you. As always, give it a like, give it a share, give it a comment. The algorithm loves that stuff. Thank you guys very much for watching. Go to statsedgetrading.com and sign up for all the stuff there, and I will talk to you soon.